Listen up, because things are heating up in the Middle East. The conflict between Israel and Iran is sending shockwaves through the global market, and Indian stocks are caught in the crossfire. We're talking about major players in the IT, infrastructure and oil sectors feeling the heat. We're going to break down which companies are most exposed, why their stock prices are swinging, and what you can do to protect your hard-earned money. First up, we've got TCS, the crown jewel of Indian IT. They've been betting big on Israel, pouring money into innovation centers and partnerships. But with the conflict escalating, those investments are looking riskier by the minute. If TCS starts missing earnings estimates because of this conflict, their stock price is going to take a serious hit. Next on the chopping block is Infosys. They've got a subsidiary, Panaya, based right in the heart of Israel. We're talking about potential damage to their facilities and disruption to their operations. Geopolitical instability is bad for business, and investors are right to be worried. Don't think for a second that Wipro is off the hook. They've been making a big push into the Middle East, and now that strategy is backfiring. With the entire region on edge, their operations are facing major headwinds. This conflict is throwing a wrench into Wipro's growth plans, and their bottom line is going to feel the pain. Tech Mahindra, the telecom giant, is another one that's tangled up in this mess. They've got significant business connections in the Middle East, and this conflict is putting those relationships to the test. We're talking about potential disruptions to their supply chains and delays in payments. The telecom sector is already cutthroat, and this conflict is only making things worse. Now let's talk about Adani Ports. They've been riding high on their investment in Israel's Haifa port, but that port is now a potential target. We're talking about a major disruption to global shipping routes and skyrocketing insurance costs. This conflict is turning the once strategic Haifa port into a liability for Adani. Larsen & Toubro, the infrastructure giant, is also feeling the heat. They've got projects in Israel that are now on shaky ground. We're talking about construction delays and labor shortages eating into their profits. LT's financial results are about to get a whole lot uglier, and investors would be wise to brace themselves. Now let's move on to the oil sector, where the pain is even more acute. IOC, the oil and gas behemoth, is staring down the barrel of skyrocketing crude prices. This conflict is sending shockwaves through the global energy market, and IOC is caught in the middle. Their refining margins are getting squeezed, and their profits are taking a major hit. BPCL, another major player in the oil and gas sector, is in the same boat as IOC. Rising crude oil prices are putting a serious dent in their bottom line. We're talking about their operating costs going through the roof and their profitability taking a nosedive. This conflict is a nightmare scenario for BPCL, and investors need to be prepared for the fallout. And don't forget about HPCL. They're another oil marketing company feeling the pressure from rising crude oil prices. We're talking about their inventory losses piling up and their debt levels becoming a major concern. HPCL is in a precarious position, and this conflict is pushing them closer to the edge. Last but not least, we have ONGC, the oil and gas exploration giant. This conflict is throwing a major wrench into their operations, both domestically and internationally. We're talking about increased geopolitical risks in their exploration activities and potential disruptions to their supply chains. ONGC is facing a perfect storm of challenges, and investors need to proceed with extreme caution. We've just gone through 10 major Indian companies feeling the heat from the Israel-Iran conflict, and this is just the tip of the iceberg. You need to stay informed, keep a close eye on your portfolio, and don't be afraid to make changes if necessary. This is a rapidly evolving situation, and what you do today could make all the difference for your financial future. Stay informed and stay safe.